options than ever before, including filing electronically. Well, joining us this morning with some tips on your taxes is David Silverman of Smart Money Magazine. He's a tax consultant and the author of Taxes for Dummies. Morning, Mr. Silverman. Good to have you join us again.
Good morning. You don't have to be so formal. Please call me David.
All right. Thank you. Please call me Donna. David, April 15th, fast approaching. Should people panic?
No. People should sit down, take their tax forms out, get their tax records together, and systematically go over every line on the return to make sure they're not cheating themselves out of a deduction they're entitled to.
When you talk about people putting their records together, what are the papers that are important?
Well, your itemized deductions. If you have large medical expenses, you have to keep all your doctor's bills. And there's something new that this year. If you make a charitable contribution in excess of $250, you need a thank you note from the charity. A canceled check no longer cuts it. You should keep your receipts from the bank to show your mortgage interest, real estate tax deductions. If you take miscellaneous itemized deductions that are connected with your business, you need a good filing system. Get an A to Z file, and through the year, just drop every tax deductible item into that file. Saving those records will pay off handsomely come next April 15th.
Make it easier for you in the long run. When you talk about a thank you note for the charity gift over $250 or the other documentation that you have to keep, and after you have your return, how long do you have to keep those?
You have to keep them for 3 years. So basically, if for your 1994 return, if the IRS doesn't notify you or audit your return by April 15th, 1998, they've missed their chance, and you can start disposing of those records.
Yeah, we were talking about electronic filing a little bit before, and I've heard some folks talk about it, but they don't seem to think that that's necessarily the way to go. Why?
Well, it costs a lot of money. Basically, you speed up the receipt of your refund by about 3 weeks. And it costs about $30 or $35 to file electronically. The IRS estimates that the average refund is about $1,300. So the average person is paying something like 40% rate of interest in order to receive their money 3 weeks earlier. The better idea, if it's a refund that you want, is adjust your withholding throughout the year so you don't have a big refund due with the IRS. Basically, you're making the government an interest-free loan, so why send the money there in the first place and then have to spend $35 or $40 to get your money back?
Talking about getting your money back or having to pay in, what if somebody isn't going to make it by April 15th? File for an extension, and how do you go about that?
Well, they should file for Form 4868, which is a request for an automatic extension until this coming August 15th. People shouldn't confuse filing with paying. A lot of folks say, oh, I can't pay what I owe. When I have the money, I'll file my return. Don't make that mistake, because you're going to subject yourself to an additional 25% penalty.
Tax consultant and with Smart Money Magazine, David Silverman. Nice to have you join us again. Thanks so much for the information.
Thank you.
Thanks.
Bye-bye.